Hello again, and thanks very much for joining us. And here are business stories making headlines this hour. I'm Michael Nath. Passengers in the aviation sector are presently going through difficult times as the domestic airlines have jacked up airfares by a minimum of 100%, with a one-way economy ticket selling at over 50,000 naira. This coming barely less than 10 days after the airline operators in Nigeria had warned that the skyrocketing price of aviation fuel by over 100% to about 400 naira per litre with a year would lead to increase in the price of tickets in order to sustain their operations. However, reports suggest the price of aviation fuel increased to between 420 naira to 450 naira per litre on Sunday, depending on the city, as against the 400 naira per litre it was on Thursday, without prior notice to the airlines, with a prediction that it could rise to 500 naira per litre in a few days. The air passengers have been groaning over the high cost of diesel airfares, describing the hike as too exorbitant and seeking for government intervention and downward review. The airline operators, under the aegis of Airline Operators of Nigeria, in a statement issued earlier, listed some of the operational challenges causing flight delays and cancellations, to include unavailability of aviation fuel, that's Jet A1, and Forex for spare parts and maintenance. Now, similarly, Lagos boat operators plying Apapa-Ikorodu route have hiked their fares by as much as 50% from 1,000 naira to 1,500 naira. The boat operators said the increase was as a result of the biting fuel scarcity across the country. According to the findings, the increase in fare has affected the number of passengers using the waterways over the past 1 week. House of Representatives has claimed Nigerian Customs Service is losing the sum of $8.810 billion annually due to the non-implementation of a customs modernization project. This was disclosed by Representative Alik Bejide, Chairman, House Committee on Customs and Excise, at the public hearing of the Joint Committees on Customs and Excise, Finance and Banking and Currency within the Minister's office. Ms. Zainab Ahmed, represented by Director Home Finance Stephen Okon. The ministry revealed that pending on court case had delayed the implementation of the project. The lawmaker said that the project is expected to generate $176.2 billion during its 20 years concession period, and is expected to automate the activities of the NCS and also prevent revenue leakages. Meanwhile, the Minister of Finance, Budget and National Planning, Zainab Ahmed, has shed more light on cause of non-implementation of the project. The minister told the House of Representatives on Monday that a company awarded the e-customs contract in 2017 lacked the technical capacity to execute the project, while also breaching some provisions of the contract. In a presentation to the Joint Committee on Customs and Excise, Finance, as well as Banking and Currency, the minister, who was represented by the Director of Home Finance, Stephen Okon, said the federal government found out that the Messrs. Adani Nigeria Limited, which was awarded the contract by the Technical Committee on Comprehensive Import Supervision Scheme, leased the contract to another company named Adani International Limited, based in the UK, and registered 4 months after the contract was signed. She said after the cancellation of the contract, Adani Nigeria Limited filed 3 different suits against the federal government, alleging breach of contract, adding that the lawsuits, which are yet to be decided by the court, are holding back commencement of the project. Now, freight forwarders on Monday staged protests at the Tin Can Island port and PTML terminals over the vehicle identification number valuation policy for imported vehicles recently introduced by the Nigerian Customs Service. The protests follow the expiration of the 72-hour strike notice issued by all registered freight forwarding associations operating at the PTML terminal and Tin Can Island report in Lagos last week to the Controller General of Customs, Hamid Ali, over the anomalies surrounding the VIN valuation policy, which has reportedly led to the hike of the assessment value of imported vehicles by as much as 300%. The protesting agents sealed off Car Park C at the Tinkan Island port. They complained that there was no consideration for rebate and depreciation value in the valuation being issued on imported cars. The chairman of the Association of Nigerian Licensed Customs Agents, PTML chapter, Oluwole Obey, claimed the Customs Controller General was yet to reply the agents' letter on their grievances. Now, Nigeria's foreign trade balance leapfrogged to a surplus of $1.1 billion in fourth quarter of 2021 as export values surpassed the import bill for the first time since third quarter 2019, representing 8 consecutive quarters of negative trade balance. This according to data on foreign trade obtained from the Central Bank of Nigeria. According to the data, Nigeria's international trade balance increased significantly from a deficit of $327 million recorded in the previous quarter to $1.1 billion in the fourth quarter of 2021. Similarly, when compared to the corresponding period of the previous year, Nigeria's trade balance increased by 115% from 7.57 billion deficit recorded in fourth quarter of 2021. Meanwhile, the aggregate trade balance for the year 2021 still lies in the negative region at $6.49 billion, although better than the $21.37 billion negative balance recorded in the preceding year. Britain plans to boost investments in renewable and climate change projects in Nigeria and will provide £10 million of support, Minister for Africa Vicky Ford said on her first trip to the country. Power demand in Nigeria vastly outstrips supply, meaning its 200 million inhabitants must either go without or rely on expensive fume-belching generators. Nigeria has capacity to produce an estimated 7,000 megawatts of power, but due to weak infrastructure, gas supply problems and water shortages, only a little more than half of that reaches the national grid. Now, Ford said the financing invested alongside Nigerian credit guarantee firm InfraCredit will help mobilize domestic pension and insurance investments and reduce risk for projects targeting off-grid and low-carbon ventures. The Nigerian Communications Commission says it is committed to the implementation of various regulatory initiatives and programs, especially the deployment of fiber infrastructure, with infrastructure companies to deploy broadband in all 774 local government areas of Nigeria. The Executive Vice Chairman and Chief Executive Officer of the NCC, Professor Umar Garba Dambata, disclosed this during an in-house interview at the Commission's head office in Abuja on Monday. He said the federal government is working towards addressing infrastructure gaps and commended both state and non-state actors for vision, diligence, and continued dedication to the implementation of the Nigerian National Broadband Plan 2020 to 2025, an initiative to address infrastructure gaps in the telecom and ICT sectors. Dambata said that the availability of broadband in sufficiency was non-negotiable and irreducible in the nation's strategy towards delivering pervasive telecom services. Now, following the federal government's plan to extend the fuel subsidy regime by 18 months, the International Monetary Fund says Nigeria will likely depend on overdrafts from the Central Bank of Nigeria to fund its proposed 2.55 trillion naira petrol subsidy bill. The IMF said this in its Nigeria Selected Issues paper report, which was prepared by a staff team of the fund as background documentation for its periodic consultation with Nigeria. According to the report, the fuel subsidy negatively affects the country's fiscal position, increasing fiscal deficit. The Washington-based lender said limpest fuel subsidies have a significant negative impact in Nigeria's fiscal position, which is estimated to increase the overall fiscal deficit by around 1% point of the gross domestic product in 2021. IMF further stressed that the government would likely depend hugely on domestic financing sources